don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. Hi guys, welcome to Savvy Money Show with me, your host Sean. Today we're talking about margin accounts. I've had a few people say about whether they should go use margin with the discount that stocks are on, and I'm going to give you my opinion, and it is just my opinion. Now, I was originally offered a margin account and I turned it down. Why? Because I find it very dangerous, and you need to, if you are using a margin account, you need to go with a low interest rate, like a 1 or 2%, and the interest rate changes on them. Like, I know some people who have ended up getting an 8% interest rate, and if you consider the S&P 500 grows at an average of 8%, means you're paying the interest rate for the S&P 500 just for holding it, and you take all the risk. What if 1 year it doesn't grow? What if there's a crash? Now, of course, the way to look at it is, what if in the summertime you put 50k into the market? It could have been anything in the market, and you had 25, 50k in margin. You thought you were safe, and then you saw what happened to stocks. You would have been getting margin called by now. Now, I'm going to tell you about some experiences, some alternatives. Of course, not a bridging loan, that's the worst thing you could do. But as I said to someone before, there are like short-term loans with banks that give incredibly low interest rates, and as I said, it was short-term. For instance, I gave I gave some videos before on high dividend stocks, such as one that was 22%. In the past, there's been quite a few that are 10%. We knew this was going to hit, and you was going to get these. They'd already declared the dividend, but the stock hadn't gone up. So instead of going on margin and losing quarter to half of it, as well as paying tax on it, you could have got a loan where it would have been 1% per year, and you could have made 9% minus any taxes, of course, and then paid off the loan. I keep hearing, yes, but during a crash or during a correction, if you go margin, you make a lot more money. If you believe in a stock, you make a lot more money. But there's a lot more risk as well, and you can lose a lot more money. We heard a couple of years ago of some of these youngsters committing suicide because their margin got out of control. It's an unnecessary risk, in my opinion, and during these correction and crashes, the interest rates tend to rise. And I think once you start with margin, it's something that you continue to use without thinking it through. It becomes a habit. All I'm saying is, beware. You get people saying, oh, but these stocks are 52-week lows, they're not going to go lower. Of course they could. People said that Upstart wouldn't go below $200 a share. Ended up that they'd be picking it up at $200 a share because it's 50% off. Ended up going to $150. And people said there was no way to go there. Any stock can carry on going. Teledoc, people said if it hit 99, they'd be picking it up. But obviously they weren't because it went lower. Always protect yourself. You do not want to get a margin call. And I advise anyone considering it to watch the movie Margin Call on Amazon Prime. Anyway, that's all for now. Don't forget to hit the like button, comment in the box below, and subscribe. I know this isn't going to get much love, but it's something that needs to be said. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.